India's financial markets have far exceeded everybody's expectations in the recent past. And therefore, all appreciations to you all for having performed and performed with distinction at a time when global markets are all fluctuating. There's so much volatility. There's somewhat a fear of uncertainty setting in most of the markets. And even uncertainty, which is a good element for people in the markets to play with, and that's what is the, I suppose, the juice, the spirit with which markets function, even by their standards. What is prevailing today is rather too uncertain. But even in that atmosphere, Indian stock markets have performed very well, attracting both foreign and domestic investors. I think it is being aided by the fact that growth forecasts for the GDP are very positive. Inflation is being in a manageable level. Political stability at the central government level is clearly visible. And all this has contributed to a good picture of India getting painted, and that has made India the fastest growing economy. Most investors who come to visit India today are keen to see where their money can be placed or parked. And that itself is a very big change. In terms of one of the things that I mentioned earlier, use of technology to make transparency or efficiency set in markets. I think the best thing which is happening in India's markets is technology has been brought in. You see business volumes going up. And that itself has been used as an indicator to rank Indian markets as some of the best in the globe. And the adoption of technology, therefore, has made a very big difference. That has obviously the fast trade instruments that you've brought in. T+2, T+1, now T0. Many of the Western markets are not able to even gulp it. They're happy with T+2, no complaints. No, but you said no, T+1 is possible, we'll do it for you. Which is all right, not bad. Are we doing it in India? Now, but when T0 has come in, many of them don't even have the capacity to absorb it yet. And they are not hesitant to admit it. That is the level of efficiency with technology that you have come forward to offer, and that has brought in a great confidence and trust in the Indian markets. Combined market capitalization is something which you referred to, sir. The BSE listed firms surpassed 400 lakh crores of rupees in April 2024. 10 years ago, it was only 76 lakh crores. Numbers speak for themselves. No need for a finance minister or anybody else to come and speak your glory to you. You're showing it to the world. This is the number. This is the way in which we have remained robust. The MSCI Emerging Market Index is also something which speaks for your performance. One of the most followed indices in the world. In 2013, placed us at 6.3%. Whereas it is now more than doubled to 14.6%. MSCI index, emerging market. There's also this concern, mostly of the opposition, because they're used to looking at savings in the traditional instruments like post office or fixed deposit in the banks. India has prided itself about how it's a savings-driven economy. Today that savings is still happening, but it's not just happening in post offices and in fixed deposits. It's now showing up also in retail demat accounts. Because through technology and the way in which compliance for listed companies have happened in the last several decades, people are able to see it transparently about how board-driven processes have brought in efficiency and corporate governance has improved. People are willing to put money in the stock markets because they are better informed. And as a result, where in 2013 we had only 2 crore demat accounts, retail demat accounts, today we have 15.1 crore demat accounts. And just in the last 1 year, 3.6 crore retail demat accounts have got added to this list. So, actually there is such dynamic change happening in the way in which savings pool of families are no more just looking at post office savings or fixed deposit in banks or in some chit funds. They are actively coming into opening of demat accounts, believing in the performance of stock markets. That speaks volumes because Indian savings people becoming investors. You're talking about a very conservative, no harm in being conservative because it's their money, hard-earned money, but conservative savings mindset today looking at opportunities in the stock market, understanding the risk it involves because there is trust in the way in which markets have performed, and that is a reflection on your performance. I just want to highlight that even the mutual fund industry, which 10 years ago managed assets worth only 6 lakh crores, today stands proud managing assets worth 54.1 lakh crores. Just 10 years ago, 576% growth in mutual funds who manage assets. The mutual fund asset under management has doubled in the last 4 years. If I said 10 years, that's the growth. In the last 4 years, it's doubled. 580 companies have raised more than 3 lakh crores in IPOs. Would you believe this in India? IPOs are giving you 3 lakh within the country, 3 lakh crores, and 580 companies have managed to raise it. Unique mutual fund investors has grown from 1 crore in 2014 to about 4 crores today. Mutual fund investors and average monthly mutual fund SIP contributions have grown 4.5 times in the last 7 years. Where was it in 2016-17? It was at 3,660 crores of rupees. And where is it today? 23-24. It is at 16,600 crores. Indian savings moving from fixed deposits to come into mutual funds and SIPs. Speaks volumes. Indian savings, small middle class families today realize that even if it is risk laden, they are better informed and therefore they are willing to move to this area of investing in stocks and shares. Rates and InvITs. Rates and InvITs are two fantastic instruments which our financial world has created, and today's sovereign funds are happy to come and invest in them because they see them as a very powerful instrument, transparent instrument through which they are able to invest and earn money. The growth which we've seen in the last 5 years, the combined NAV surging from 10,000 crores where it was 5 years ago. Today it is 2.5 lakh crores. 10,000 crores to 2.5 lakh crores through REITs and InvITs.